Good day, fellow investors! I'm doing all the top 25 positions in the S&P 500, and remarkably Tesla is position number 4 or 5 if you switch it back with Google. So I have a notorious past Tesla analysis history, and I've made quite a few videos. Perhaps this was the most serious one where it discusses reflexivity, how what has been going on with Tesla reflects also in Tesla's business, allows for growth, but this has been the past. I notoriously said when the stock price adjusted for splits was 45, I said that it was worth about 4 or 5, so I am now missing it by about a magnitude of 100 to 200 times. What do I think of Tesla now? Well, I really think this has been remarkable. So the risks didn't materialize any. Everything has been great for Tesla, and those that invested here did really well. And now it is a little bit down from the exuberant peaks, but if history is of any lesson here, it will go to the moon or Mars. But let's do an analysis from the current perspective. Market cap almost $1 trillion, price earnings ratio of 188. Let's discuss a little bit the business, what's going on with Tesla, because business, then valuation, and then we can get to a risk and reward thesis. So just a little bit here what Tesla did, and they also explain it here, that there should no longer be doubt about the viability and profitability of electric vehicles. This was a risk and reward. Years ago, nobody knew whether there will be profitability and viability. Now that's more certain. Of course, the stock boomed, but risk reward is what it comes to investing, betting or investing. But they go into demonstrating that EVs can be more profitable than combustion engine vehicles. So only after a few quarters of profitability, this is a little bit too stretched, I think, and they are really banging on the crowd following that they have. And this is a little bit too much, really, also for Tesla, but that is Tesla. And competitiveness will be determined by the ability to add capacity across the supply chain and ramp production. This reminds me of 2012 and gold, when it was all about who can ramp more gold production, and nobody cared about the prices, what they are paying, the valuation. So you know how that ended very badly for most gold stocks. Then of course full self-driving, it's another bet, and they say, like for all investors, we are at the very early stages of the journey. So very stretched from a investor perspective. When you see these promises, okay, they are betting on capital raises, cash flows, as they did in the past. Typical Elon Musk, and he did really well with it. But there is a risk reward. They have now achieved good EBITDA margins, net income, let's say 15% of revenues, which is very good in the automotive industry. And this is what they have now, plus a lot of promises on growth, new production, new models, so really growing strongly. They have significant cash, and what they expect over a multi-year horizon to achieve 50% annual growth in vehicle deliveries. So 50% annual growth, this is really a bold thing to say, but that is again Tesla. And then also they have expectations of software profits too, built on hardware related profits. However, if you go to this 50% average annual growth, if they do it from the current 1 million base, 50% over 5 years, that's 7.5 million cars. So, okay, they did really something already impossible to get to 1 million, but to 7.5 million, there will be something that they will have to deal with, and that's competition, because the rate of growth will depend on our equipment capacity, operational efficiency, and the capacity and stability of the supply chain. They don't even speak about competition like that there is no other. And this is, again, a big risk. So let's do a stock valuation. If we go to our intrinsic value table, I have put here Tesla, and then I have calculated the free cash flow per share. I have used the last quarter as a benchmark for future quarters. So let's say 3 billion in free cash flows, and looked at the number of shares, the diluted number of shares. So 10% dilution is also something that you have to expect ahead. Calculated, and I get to free cash flows of $10.57 per share if they make 12 billion in free cash flows. 10.57, and now we have to discuss the growth rate. They say they will grow at 50% per year, and let's say then they grow at 25% per year. If that happens and the terminal multiple stays at 25, the present value for a 10% return for Tesla is 1,888. So Tesla's stock in that case should double. But if we change the growth rates, and let's say they don't hit 50, they hit 25 per year over the next 5 years, which is still remarkable, and then they slow down to 12, and the terminal multiple gets to a normal 20, then the present value of the company is 391. So that's the downside of 60%. And let's say that there is a worst case scenario. Okay, these guys have to be switched, not relevant now. But worst case scenario, let's say that they grow at 15% and then 0, and the terminal multiple gets in line with other car companies. That's a 90% downside. Can this happen? Let's take a look at Cisco when it was promising to conquer the world and do everything, and only Cisco could do that. Well, the stock crashed 85%, and yes, the business remained there and grew consequently over time. So this is the risk and reward, especially on exuberant promises. On 18 times sales is pretty risky. So 18 times sales, compare that to Ford that has sales of 136 billion. It has a market capitalization of 71 billion, so practically 0.5 times sales. Tesla has 18 times sales, of course, faster growth ahead, but Ford electric vehicles is also growing pretty fast, so that's something that the market is exuberant about now, and for me it's simply extremely risky. It was risky 2 years ago when it was 1/20th of the current price, and now it's even more risky. And now let me discuss something else about the investment risk and reward. What happens when you make your money on Tesla, or you already made your money on Tesla? So let's say you invested and you made 20 times your money on Tesla. Very happy for you, nothing wrong with that. But you then look for other investments, and then you might have invested in Palantir because it's also promising to conquer the world. Okay, space shuttles, whatever they have done, also promising to conquer the world, 80% down. And of course, there is something else that I have noticed, and that's the correlation with Bitcoin. If you look at Tesla, when Tesla goes down, when Tesla goes up, Bitcoin is going in a similar fashion, which means that there is so much noise when it comes to investing in the Tesla stock that I don't really think anything has to do here with fundamentals. So my conclusion and my personal opinion is that Tesla is the perfect example of the current investing mania, of the current investing hubris, and it's most likely the business can do okay. The business has cash flows, they are doing well, they have the capacity, they have the money, especially after the capital raises over time, thanks to the high stock price, reflexivity into the stock price. I'll put the reflexivity video in the description below, and that's okay. But it's very likely that investors over the long term will get burned or will have lower returns because 2 trillion, 3 trillion, what's that? 20 times sales, price earnings ratio of 200, etc., etc. Anything can happen, but you want to see how much of your portfolio at current rates you want to invest in miracles. I would not bet on Tesla. I never did bet on Tesla because it's simply not my style, so I'm totally the wrong person to analyze this. But I am very happy if Tesla triples from now on. I want you all to make money, and if Tesla triples, I'm happy for you, and I'm happy to be called the YouTube Tesla idiot, because it seems I'm the only guy not investing in Tesla on YouTube. I'm fine with that, so perfect for me. If you're a Tesla fan, I'm looking forward to your hateful comments in the description below. That's life. You can say that I'm an idiot. I'm fine with that. Wish you all the best with your investment. I'm just saying why am I not investing, and that's it.